All right, guys. Now, let's move on to the balance sheet. Now, what does the balance sheet basically show you? It basically shows you what a company is worth. When we think about a company's net worth, all we're saying is that if we sum up all the resources of the company, also called assets in accounting terminology, and from that number, if we subtract the total value of the money the company owes to different people or different suppliers, different other companies, if we sum all of that up, also called liabilities, then we get to their net worth. So a simple way to think about this is total assets minus the total liabilities gives you total equity or the company's net worth. So with that said, if you have a look at Apple's balance sheets, what you will see is that the company has divided this into two sections. One is assets, and the second is liabilities and shareholders' equity. Now, let's start off first from the different assets or the different resources that Apple reports on its balance sheet. These are the items from which Apple will derive profit or benefit in the future. So let's go over them one by one. Firstly, when we go into the assets and also within the liabilities and the shareholders' equity, you'll see that they are divided into two sections, current assets and non-current assets. Now, what are current assets? Current assets are the cash and other resources which Apple can sell within a period of less than a year and convert it into cash. Non-current assets are the resources that Apple has which it will not be able to convert into cash in a period of less than 1 year. So this is the way that typically a balance sheet of a company is divided. Now, if we talk about the different items within the current assets, we've got cash and equivalents. This is all the money that Apple currently has in their bank account. Now, this is an asset because Apple can use this cash to buy a new factory, allowing it to make more money in the future, or to go out and acquire some competitor. So it's a very useful asset to have, which is why it's an asset. So we can see as of the end of December, Apple was sitting on around 40 billion of cash. Next, we've got marketable securities. Now, what are marketable securities? These are financial assets like stocks or bonds, which effectively Apple buys instead of just holding cash. Why would they do it? Because it's not very efficient to just hold cash all the time. Marketable securities effectively give you some return on that cash. But these are very liquid securities which Apple can quickly sell and get cash for if needed. So you'll see here that Apple actually has around 67 billion of marketable securities. So if you keep going down, the next item here is accounts receivable. Now, what's accounts receivable? Say Apple has sold an iPhone or has provided a service to a customer, but they haven't yet received the money for it. An example of this will be, for instance, Apple has sold an iPhone to some retailer or some corner shop company. Apple hasn't charged these companies yet, but once these companies sell Apple's products to different customers, they will receive the cash from these customers and then pay this back to Apple. Now, What happens once these accounts receivable are received? They become cash and they hit right here. And accordingly, you see that the accounts receivable reduce and the cash increases. Another concept very similar to accounts receivable is vendor non-trade receivables. I don't want to go too much in depth into it because it's similar to accounts receivable. The only difference here is that instead of this is basically not money that Apple is owed from its retailers or its other partners. Instead, it is the amount that Apple is due to receive from its suppliers or the companies or the partners which help Apple make its products. Now, the next item here is inventories. So what are inventories? Inventories is the value of the Apple products that are sitting in its showrooms or in its warehouses. So imagine going into any Apple shop and you'll see a bunch of different iPhones, MacBooks, iPads just lying around available for sale to the public. This is effectively called inventory in accounting terminology. And other current assets is a sort of catch-all term, um, which includes all other items which are also assets, and Apple has sort of lumped them together in this sheet because some of them are quite small to be listing on their balance sheet. So effectively, if we sum all these items up, we come to total current assets, which is around 163 billion. Pretty stable when we compare it to the number from last year. Now, moving on, we come into non-current assets. And remember, these are the assets or resources which Apple owns, which cannot be monetized into cash in a period less than 12 months. Now, within this, the most chunky category you will see is marketable securities. Very similar to marketable securities under the current assets, Apple has invested a huge chunk of money in financial assets, which it has invested for a period of more than a year. Now, companies will do this for several years, but typically for Apple, what effectively this means is they do not think that they need this 100 billion of cash in the next 12 months. So because they don't need it, what they're effectively doing is investing it in the financial markets to get some sort of a return from these assets. The next item here is plant, property, and equipment, which is a very, very important item. And this is one of those items which you'll see in every single financial statement. Now, what are plant, property, and equipment? Plant, property, and equipment is the value of all the factories, all the warehouses, all the property that Apple owns. So if you think about a company like Apple, it has such a huge presence globally. It's got offices in the US, in Europe, in China, in India, all across the world. So if you sum up the value of all those properties, all of that, all of those warehouses that Apple owns, it's roughly 37 billion. And similar to the other current assets above, other non-current assets is again a similar catch-all or a lumped up figure for all of these other small items which Apple does not want to list one by one, so it's just lumped them together. So if we aggregate all of these non-current assets, it comes up to 177 billion. Now, combining the total non-current assets and the total current assets gives us a picture of the value of the total assets that Apple has, which for the period ending December 2019 was a huge $340 billion. Let's move on to the next section, which is liabilities and shareholders' equity. Similar to assets, liabilities can also be lumped into two categories. One is current liabilities, which is effectively the money that Apple owes to different counterparties, to different companies, to different people in a period of less than 12 months. And non-current liabilities are those amounts and obligations that Apple is due to pay to people, but not in the immediate 12 months, but beyond it. Now, similar to the section above, let's cover off all of the liabilities. Accounts payable. Accounts payable is effectively the money that Apple owes to its suppliers and to the companies that work for Apple in helping them create their products. So think of this as money that Apple owes to some supplier or some factory in China where a company is helping them make its products. So they owe that company $45 billion. Other current liabilities is again a similar item to the ones that we've discussed above, where a lot of different liabilities that Apple owes have been lumped together. Now, typically, what the other current liabilities includes can be a bunch of different items like taxes, which are not immediately due but will be due in the next 12 months. With that covered, we're going to talk about some of the most important items in the liability section, which is a combination of commercial paper, term debt. So let's talk about these. So, in order to build a big business such as Apple, it needs money from the financial markets. You can either raise money from the stock market, or you can raise money from the debt markets, or you can go to a bank to give you money. So, in the case of Apple, it has a total debt of 10 billion, and it has commercial paper, which is another kind of debt of around 5 billion. So if you sum those up, it basically tells you that around 15 billion of debt is what Apple has raised from the debt markets to build its operations. Now, if we sum up all of these liabilities, which are due in a period less than 12 months, it comes up to 102 billion. Similarly, let's talk about the next section here, which is non-current liabilities. Again, we've got term debt here and other non-current liabilities, which in the case of term debt is the debt that Apple has borrowed from banks or from the financial markets, which it does not owe the lenders in the next 12 months. So it can be owed in 2 years from now, 3 years from now, 5 years from now. But for financial reporting purposes, we describe it as a non-current liabilities because it's not due in the next 12 months. Other non-current liabilities is again a catch-all figure, and this can be any tax which Apple owes in a period which is beyond the next 12 months, for example. But again, this is a catch-all figure which can include a bunch of different items. So let's look at this now. If we sum up all the liabilities, if we sum up the total current liabilities, which are 102 billion, and the total non-current liabilities, which are 148 billion, we roughly come up to 251 billion. Now, what is the point of all this? We've calculated the total assets, we've calculated the total liabilities. What is this telling us? If you remember the equation that we covered at the beginning of this section, the total assets minus the total liabilities tells you what a company is worth. So if we subtract 251 from 340, we basically will find out what Apple is worth, or what is the net worth of Apple. And that's this line item right here called total shareholders equity. And that number is 89 billion. So what that effectively means is that Apple has a net worth of 90 billion. If someone came out and made an offer for Apple, then this is what the company would be worth. So guys, with that, we've covered broadly all of the key elements on a company's balance sheet. And specifically, we've covered the key assets that Apple reports on its balance sheet and the key liabilities that reports. Now, similar to the income statement, I want to spend some time really interpreting and trying to explain to you what I see on Apple's balance sheet. Because at the end of the day, these are just a bunch of numbers, but if we really have to drive some insight into Apple's business, we need to think about the interpretation of these numbers. So let's talk about assets first. Talking firstly about numbers, 340 billion as an asset base is huge. Apple is amongst a handful of companies, maybe 4 or 5 companies globally, which has such a huge asset base. It's a massive company, one of the biggest in the world. So that's one. The other key thing that you'll see, which is very interesting, and in this regard, Apple is unlike a lot of other companies there, is the percentage of total assets that Apple has in cash and marketable securities. So if you sum up all the cash and marketable securities that Apple has, this is roughly almost $200 billion. So this gives you a good sense of how cash generative a company Apple is. And if we go a step back and look at the income statement, you'll recall that that Apple actually generated 22 billion of net income just in this quarter. So it gives us a sense of the cash generation capacity of this company. Now, similarly, if we go into the liability section, we see that Apple does have a significant amount of debt. It's got commercial paper and term debt of about 15 billion, another 100 odd billion of non-current debt. So that's a huge amount. But if we think about it in the context of the total asset base, it is not an amount which would be burdensome for a company such as Apple. For a normal company, having a debt of $100 billion would be enormous. But because Apple is such a cash generative company, this is an amount which is bearable for this company. Now, if we talk about the total equity of the company, or the total net worth of the company, which is 89 billion, this gives us a very good sense of what Apple's accountants value the business at. So this total equity number gives us a sense of the company's net worth. Or if a competitor or any random company came out and said, okay, we want to buy Apple, what would it cost them? It would cost them at least $100 billion. In reality, it would cost them a lot more, but the book value or the accounting value of Apple's business is $100 billion. Now, as you can imagine, there are not a lot of companies out there that can pay $100 billion for a business. Again, this goes back to the size and scale of this business and how enormous and cash generative and revolutionary a company Apple is.